Hi there. Welcome to Business Leadership Podcast. In this podcast, I interview successful business leaders and industry experts to help you grow your business. I truly believe that sometimes a single insight can completely change your business directions and allow you to achieve your business goals. In this episode, I interviewed David C. Barnett. David's an author of 7 books. He's a seminar host. He's a consultant. He's also a public speaker, and he's also a business coach when it comes to M&A transaction process. David's been helping out business leaders for many years on a variety of different markets to either prepare the business for M&A transaction or simply help them increase the business value. So if you're in a business leadership position, I think you want to watch this episode, whether you're trying to sell a business or prepare for exit strategy or simply just trying to increase the business value. I think you will find this discussion very interesting. David walked us through step-by-step process. Even though you're not trying to sell or purchase another business, if you simply want to increase the business value, he walked us through step-by-step process how to increase the business value. If you like this content, don't forget to send us your feedback, and don't forget to like and subscribe to this channel. Until next time, enjoy. Hi guys, welcome to Business Leadership Blog. Today my guest is David Barnett. David, he's a business consultant. He's been helping business leaders either buying a business or selling a business or some sort of transaction related to business. He's the author of several books. He has an online, a YouTube channel as well. He's a multiple podcast channels as well. And David, you've been doing this for a long time, and I'm new to this. I'm looking forward to learning from you. And thank you so much for your time, and welcome to podcast.
Oh, you know what? Thanks for having me on. And you know what? It's the biggest piece of advice I can give to anyone who wants to start a podcast is just to begin, because you can sit around thinking about it for an awful long time. I know I thought about it for a while, and then I finally got going. And I would discourage anyone from ever watching any of my videos from 2014 because they're really, really awful. But that's how I got to make better videos later on, of course.
Yeah. No, it's one thing, I think I mentioned that to you the other day we were talking that, I didn't realize how much is learning curve for me in this blogs. And I thought I was going to add value to for my clients or, the people I'm connecting with. Didn't realize how much learning curve is for me, to going through it. So I learn every, podcast I have, I'll take away more from the podcast than anybody else will take away from it.
Oh, and it's a great way to expand your network as well. I mean, you and I are now friends, and it's because you decided to pick up the microphone.
Yeah, interesting. So tell us a little bit how you help business leaders, David. Let's talk about it. You've been doing it for a long time. How you've been helping business leaders and where you see that industry is going in that other area.
Sure, no problem. And so as you mentioned, I at one point was a business broker, but my path to becoming a business broker is one that probably a lot of your other listeners will identify with. I was one of those kids who was always into business, always trying to figure out how to make money as a child and starting up little teenage businesses when I was an adolescent. And then eventually I went to business school thinking that they were going to teach me what I needed to know to become a businessman. It was only after a few years I realized that they were trying to teach me how to be one of these middle managers in a big company. And my passion and interest was always in the businesses that we see when we're driving around in our city, sort of the smaller to medium-sized businesses. And my real introduction to business came after I graduated because I was fortunate enough to get a job as a sales rep with the Yellow Pages. So this was back in the 90s when it didn't matter where you were in the world. If you typed plumber into Google, you would get a plumber in California. And so they hadn't figured out local search at the time. And so if you wanted to find a business that could help you where you lived, you reached for the phone book. And so I was able to go and meet with and talk with the owners and managers of all these businesses and learn what was important to them. And that's when my understanding in business really started to become more broad in understanding all different kinds of industries and businesses out there. And eventually, though, I could tell that the days were numbered for the Yellow Pages. And so I left that to start a business. So this was my first business startup. It was me and a partner. And we actually tried to buy a franchise, but, it didn't work out. And so we copied the idea and started our own thing from scratch. And it worked out quite well, but we were serving homeowners and my heart really wasn't in it. I have a passion for business and entrepreneurs and other business owners. And so we sold that business. So it's interesting because it was one of the first businesses I sold. But I didn't get into buying and selling businesses at that point. I followed a different path, and I signed up and I took this program to learn how to become a business loan broker. And
Yeah.
so I started a new business as a broker of loans, capital leases, factoring facilities, et cetera, all kinds of finance tools for small and medium-sized businesses. And I actually became very good friends with the bankers, because a lot of the times when they couldn't help their clients, they would send them to me, and I would find some kind of alternative finance solution for them, or spend the time and do some work with them to help them package up their need in such a way that the bank that referred it to me would actually then agree to finance it. And so I had quite a few of those where I'd get a referral from a banker and then come back with a package for the same banker, and that they would go on and approve the financing, whatever it was. And so that was a lot of fun until the Wall Street, Bay Street crisis came in 2008, 2009. And literally half the companies that I was using as alternative lenders went out of business themselves. And so I needed to make a pivot. And one of the things that I noticed when I was doing that work in financing was that a lot of people were looking for money to acquire existing businesses. And I saw a lot of really poorly structured, poorly handled deals. And so I knew that there was a demand in my market for someone who could do it a little more professionally. That's what opened the door for me to get into the world of business brokerage. And I was fortunate enough that I signed up with a big international company that gave me access to training. And so I earned my professional certification, ended up owning a business brokerage for 3 years. I sold 35 businesses in that time, and eventually got out of it because Gurmeet business brokerage is actually a pretty awful business to be in. It's exciting. It's interesting. You get to understand the point of view of the buyer, the seller. You learn how to alleviate the fears and concerns of all the advisors, the lawyers, the accountants. You learn how to please the bankers. But at the end of the day, it's a project-based type of business, which is compensated based on completion. And there's so many of those other advisors around the deal that no matter what, maybe wouldn't be satisfied. And I realized I'm in this business where I've got willing buyers and willing sellers who are coming together to make a deal, but other people have the ability to upset the deal and by extension, upset my income. And I realized I need to get into something a little bit more stable. I had 2 young kids at the time. So I became a banker. And so I started to actually, I was strictly involved with supply chain finance, with receivables financing and payables financing. And people kept coming to me though, because they were working on these deals. They'd been given my name here locally. And so I started a little bit of side consulting, and that grew and grew. And when the bank decided to reorganize, I raised my hand when they were offering out packages. And that's, that was 5-6 years ago now. And so I've just been doing this consulting work ever since. And because of things like the YouTube channel and the books that I've written, I find clients from throughout the Anglosphere. So I work with people in Canada, the US, Australia, and UK, New Zealand, and coach them through the process. In a large part of my work is coaching people through the process of buying or selling, or the steps that lead you to that point. So looking at deals, helping people look at their own business through the eyes of a buyer, doing evaluations, giving people a plan to increase the value if they've got a horizon of time. And so this is the world that I work in. And it's interesting that I meet people from all kinds of other different places. And so, for example, I meet buyers who are people dissatisfied with their job. They want to become an entrepreneur, but they don't want the risk of a startup. So they'll look at acquiring something, or businesses that want to grow through acquisition, for example. So I work with a lot of people who are already in business, and they see the opportunity to grow quickly through acquiring another business and kind of tucking it into the business that they already have. Of course, a lot of challenges with that kind of thing as well.
Very interesting. So you mentioned a couple of things, David. You saw very closely what happened in 2008, 2009, the disruption in the market. Similar what's going on in the COVID right now. I was fairly new to business at that point. I didn't probably see that closely, but I see now that a lot of businesses are either getting out or are they buying other businesses because there's so much, disruption what's going on in a business. Either you have to reinvent your product or reinvent your services. It just COVID put you in a spot that where you have to figure things out. where you see the similarity in these two eras, either COVID or 2008, 2009, or is it a similar, or what, or where you see from your side with your clients, what they're saying, that are they looking to increase more product services and take on more businesses, or they're trying to contract more? Hey, listen, I gotta sit back and see what happens, and then take action from there.
Yeah, sure. So number one, the biggest difference between what happened in 2008, 2009 and what's happening today is in 2008, 2009, we had a general recession, and a lot of different industries were affected, some more resilient than the others, but people could make changes and adapt and find new ways to function profitably. Okay. And eventually we came out of it. What is happening now is we've been split into three different economies. Mm-hmm. So, and different businesses fall into the different buckets. So you've got people who are largely unaffected by all of this pandemic stuff. So think about industrial concerns, garbage contractors, people that weld pipe, people that build propane tanks, like
pharmaceutical companies.
Sure. Huge. Well, no, I'll save them for a different bucket, but
okay.
you've got a huge swath of industry, which really was unaffected,
okay.
And maybe they're facing labor shortages of things of that nature, but their business was not closed, interrupted, shut down, et cetera. Then you have the people who have benefited from all of this. And this is where your pharma companies might fit into, right? Or the people that make, masks and things of this nature. They're profiting from all the changes that are happening. And then you have the people who, of course, hospitality and whatnot, who have suffered from the direct implementation of government mandates and public health measures, et cetera. Mm-hmm. And so I would say that the biggest difference is that while in 2008, 2009, people can make a pivot and change and try to grow their business again, today, the people who've been affected to the downside, they can attempt to make pivots and changes, but the problem is that the rules keep changing. And so what worked for a restaurant, in the summer may not work for a restaurant in the fall. And so the ability to plan, the ability to forecast, the ability to see any degree into the future, this is an impediment to business planning. It's an impediment to management. But when you take away any kind of foresight whatsoever into the future, you also take away the ability to put a price on that business, right? As far as the anticipation of earning future cash flows. Mm-hmm. And then on the other side of things, when you have businesses that have profited from this, the question then becomes, well, what if these profits don't continue? And so there are big clouds that kind of loom. Mm-hmm. I was on a conference call a couple of weeks ago with some people that run one of these big online marketplaces for businesses that are for sale. Yeah. And they were talking about how the average price of businesses sold in the third quarter of 2021 is more than double the average price of businesses sold in the third quarter of 2019. So what does that mean? Well, the number of businesses transacting actually has gone way down, but the average price is higher, meaning that a lot of the smaller businesses that might normally have been changing hands simply aren't. And so if you think about a business that is performing poorly, that restaurant example I gave you, those people that own the business, if they do really poorly, they might close. So closure is one potential outcome. A closed business typically doesn't sell. Its assets might sell. Someone might buy the furniture, equipment, et cetera, right? But it's not going to be sold as a going concern. People who are doing more poorly and have an uncertain future realize that now is not the time to sell a business. So a lot of those impacted businesses are being withdrawn from the market. People say, you know what, I'm stuck with this now. I'm going to have to live through it. I'm going to have to try to navigate my way to the other side. And then when things recover, I'll look at selling then. So this would be another indicator of why businesses may not be in the market. And, small and medium-sized businesses trade for relatively low multiples of cash flow. It's not like the stuff that you see in the business press where businesses are selling for 8, 9, 20 times cash flow or anything like that. And so no one really ever gets excited about cashing out. There can be strategic opportunities. If a big player really needs what you have and they're willing to put some of their potential earnings into their valuation mix, you might get a very handsome cash out, but that's not typical in the world of SMEs. In the world of small and medium-sized enterprises, the typical buyer is another person like the seller. an individual who wants to come in and they want to run the business, right?
Mm-hmm.
Even if it is a strategic acquisition, one company buying another one, the acquiring company is very recalcitrant to put any of the value of what they bring into that transaction. If I have customers that can benefit from what you have, why am I going to pay you for the work that I then have to do to go and sell my customers on this new product I'm going to add to my line, right?
Mm-hmm.
And so because of those low valuation multiples, business owners typically don't cash out like a Silicon Valley entrepreneur might.
Mm-hmm.
It has to be some kind of pressing personal motivation that drives somebody to want to make a change in their life. So this is where we come up with the reasons like divorce, poor health, the need to relocate, retirement, burnout and fatigue is a big one. So one of those things comes up in the business owner's life and causes them to want to turn the page to a new chapter of life. And that's when they decide, now I want to sell my business, and they go looking for, the most expedient and lucrative exit that they can find at that point, usually.
Mm-hmm.
And the level of preparation that they've maintained is going to have a big impact on that exit.
Mm-hmm. So very interesting. I think one other point you mentioned, the business not, in the market to sell. I think part of that could be the government's pumping money in the economy as well. That's slowing it down. That people, business were in a life sport. Now government provided so much money. They're paying for so much, payroll, for business to survive. It slows down for business leaders. Hey, listen, what do I need to sell? Let's let that program wear out, and then I'll decide what I'm going to do.
It's interesting that you bring up that point, because a lot in Canada anyway, a lot of these programs are coming to an end. But I'll tell you, back in 2020, I was working with several clients who were looking at acquiring marginal businesses. Mm-hmm. So these businesses were not making it much in the way of profit, but they had good locations. In the hospitality trade, excuse me, mm-hmm. In the hospitality sector, mm-hmm. You'll often have businesses that will trade on what's called a redevelopment value. Mm-hmm. So if you think about a restaurant that isn't particularly profitable and somebody wants to open a new restaurant with a new theme, decor, menu, etc., it's far cheaper to take over a marginal or failing restaurant and redecorate it than it is to take a brand new commercial unit and mm-hmm. build one from scratch, right? Mm-hmm. And so I was working with several people that were kind of on that path, looking at buying some of these marginal businesses. And then the pandemic hit, and every one of those deals fell apart. Mm-hmm. And they fell apart because these marginal businesses suddenly became very profitable. Once the government picked up 3/4 of the wages and started to subsidize the rent after a while, these businesses became very lucrative, right? Mm-hmm. And so it's interesting how things, get distorted in the marketplace mm-hmm. when you have some of these government interventions. Should the government have done those things? Well, I don't know if they had much of a choice. I mean, you can't close a third of the economy and hope for any kind of positive outcome. Mm-hmm. I think they had to do something. But I think that there are unintended consequences that have now been baked into the cake. And mm-hmm. we're going to see these things unwind as we move forward into 2022, for example. Now that those supports are gone, mm-hmm. Some of these businesses that seem to survive the pandemic, I think that we're going to see some of them closing out now.
Mm-hmm. Very interesting. That's a great point. I had a discussion with somebody last weekend, and this gentleman manufactures appliances for restaurants, and they've never been that this busy for the last 10, 15 years. And I had a discussion with them. I was a little bit surprised. Say, listen, everything's shut down, restaurants closing. See businesses shutting down. Why are you so busy? And his point was, so every time there's a disruption happen in the economy, the easiest business to open is a restaurant. So all these people who left their jobs, first thing they do is open a restaurant. So he get to sell appliances to these new businesses, right? So he's been manufacturing through the whole COVID, and then he can't find enough labor, and that was one of the challenges. And he's been so busy. So he just, it's a different perspective when you look at from different angles that, there could be businesses that are so busy because he anticipated that a lot of business, people are going to open a restaurants, and he's going to be more busy selling appliances to these restaurants.
That's a great, that's a great thing to bring up, because when I work with people looking at evaluating their business, and I work across many different sectors, one of the great tools that I have is the ability to look up the details of past sale transactions. And so restaurants and food service and other hospitality, they tend to have a lower multiple of cash flow as the sale price.
Mm-hmm.
And what that tells us is, it tells us when we look at the cash flow and the selling price of a transaction in the past, it tells us the risk profile that buyer saw in that business, right? To what degree do I believe this cash flow may or may not continue? It is going to, if you think of the other extreme, a government bond, right? You buy a government bond and you're going to get the interest payment, right? And so people will pay a very high price for that tiny amount of cash flow.
Mm-hmm.
Restaurants at the other end of that scale, people will pay a lower price for the cash flow because they're not certain how many years or if it will continue forever. Mm-hmm. And one of the reasons has to do with analyzing the industry and sort of barriers to entry, the moats that protect that industry. So if you're in a restaurant, if you're the only food service in a large office complex, for example, at one time that would have probably given you a higher valuation, limited competition.
Mm-hmm.
In the world of remote working, I don't know anymore
if
that will, right?
Yeah.
But one of the reasons why we also get this low multiple in food service is because of the ease of new entrants coming into the market. Mm-hmm. If you think about that constant churn of new places coming all the time, it really does create that uncertainty that leads to lower valuations. Mm-hmm. As opposed to a business, for example, where customers are very sticky and maybe contracts are in place, and you have service contracts or something where there's regular revenue from that base of clients. You can get a very different kind of result if you look at a business that people are paying a monthly fee and part of their business system is integrated in that service, whatever it is.
Mm-hmm. Very interesting. Yeah, no, definitely a different model makes that, totally different, a different sense. So let's talk about business leaders, who are watching, who are listening to our podcast. What are some of the, you've been doing it for a long time, David. What are some of the mistakes you see from either selling a business or buying a business? What are some of the common mistakes you see that people go through, or what builds a business value? At the end of the day, you evaluating business based on a value. So what is those key points that builds a business value that people need to be careful?
So the price that a business sells for mm-hmm. is going to be determined by the amount of cash flow that business delivers. Okay. And so when a buyer looks at a business, they're going to be looking at that cash flow. That's the first question. How much money do I get if I buy this business? The second question they're going to ask is, will this cash flow carry on under my stewardship? And so that second question is a much more loaded question, because that is going to lead us to ask questions like, how well documented are the processes? How well documented are the procedures? How well, organized is this business, et cetera? And so a lot of the times business owners will believe that they can go and find a buyer for their business when they want to sell. And the reality is it doesn't really have a whole lot to do with you as an owner. It has to do with the state and condition of the business. Mm-hmm. So businesses will sell when they're ready to be sold, when they're in a state of preparation. Mm-hmm. And, I'll get a lot of people, one of the things that I work with people on are systems and planning and organizations and having all this stuff documented. And, they won't want to invest the time to do this work. And here's the biggest takeaway for everyone listening is, if you invest the time to get your business ready for sale, in 9 times out of 10, this is what I've seen, you end up with a business that is actually usually more profitable, with problems identified. As you go through this process, you can see where the problems are and you can address them, and you end up making more money, and you end up with a business that's easier to run and more pleasant to run. And one of the ironic things that has happened several times with me is I've been working with someone towards preparing a business for sale mm-hmm. because the owner was motivated by burnout and fatigue. And as we went through the process and they were able to delegate more and more of the stuff that was gumming up their days, mm-hmm. they actually got the business into a state that they had initially imagined when they first got into business, where they thought this is what it's going to be like. Mm-hmm. And then they lose interest in selling.
Wow.
They actually end up getting the business they always wanted.
Yeah.
And that, I think, is one of the big reasons why people should be working on this stuff, is you end up with a better business and it's easier to run. And if anything should happen, remember I mentioned those 5 reasons why people sell a business. Only one of those 5 is planned for retirement. The other 4 are things in life that happen to us. And so if your business is in a state of preparation and ready to be sold, and one of those things pops up, then you can put it on the market and you can move on. Too often people don't do the work in advance. Then they decide they need to sell, and then there's no time.
Yeah.
And then they have to look at what's the best I can do. You mentioned mistakes that sellers make. One of the biggest mistakes I see is that they don't work with somebody to get a proper valuation of what their business might likely sell for. And businesses have a wide array of values. And so it's not necessarily hiring somebody who's going to give you a fair market value or an investment value, or, there's all kinds of different terms. In a court case, your business might be pegged at a certain value. In a private sale transaction, your business could be pegged at a very different value. And so it's got to be the right kind of evaluation. It's going to show you, number one, the price, what that it'll likely sell for. But number 2, it's even more important, the likely terms of sale. I don't know if there's much in life more difficult than getting money for a business to buy one. Banks are risk averse. The money in the bank is your neighbor's grocery money. They're not supposed to take risks with that money. And so when I had my brokerage office open, for example, 2/3 of the deals we did had no bank financing at all. Not to say that the buyers didn't borrow money, but they often had to borrow against things like their homes or life insurance policies, or other assets they might have had in order to raise the money to do the acquisition. They didn't get specifically acquisition financing from a lender. And so when I tell someone that their business might sell for $500,000, what's actually even more important information is that it might sell for $500,000. You might expect a buyer to be able to give you half of that on closing day, and you might have to receive the other half over payments over 5 or 6 years. Or if they can bring a lender to bear, maybe you'll get 70 or 80% of that money on closing day, but the lender might require that your note be postponed with no payments for several years sometimes. And so this kind of perspective is often new for most business owners, because people don't buy and sell businesses a lot, particularly in Canada, right? In the States, the tax scenario is very different. There's all kinds of things people can do there to sell a business and roll the proceeds into a new acquisition without paying capital gains. And there's different things they can do there. In Canada, those tools don't exist. And so far fewer entrepreneurs do far fewer transactions. And so I've seen people who will put their business up for sale. They'll believe it has a certain value, or they'll price it like a house. They'll say, I'm going to ask this amount. And if I can't get it, I'll reduce the price later. Wrong strategy with a business, because there's always pent up demand, and there's no such thing as a market. Every business is unique. So when you put a business on the market, chances are there's someone who's right for your business out there looking for it. If you meet that person and you have unrealistic expectations of what you can sell it for, and you are not willing to receive a reasonable offer, you will lose out on that buyer. And it might take you 6 or 12 or 20 months to meet the next one. Believe me, I've been through it. I've had some businesses where we've had 3 offers over 3 years. And the more specialized and specific the skill set or industry or knowledge set that a buyer would need, the more difficult it can be to find that person. And so I've had people come to me after trying to sell a business for several years who've said, I need your help. I've been working with different brokers. I can't find a buyer. I'll look at the package that their broker put together, and I'll say, well, here's the problem. You're asking, $1 million. The business is probably only worth about 650. And in all likelihood, you can expect someone to give you 60% down based on the, equipment and tangibles you have in the business. And you'll have to get the balance over 5 years. Wow. And more than once, Gurmeet, I've had people say to me, oh, well, I had an offer like that. And they didn't know to take the offer because they didn't know what a reasonable offer was what it looked like. Wow. That's one of the biggest tragedies from the selling side. From the buying side, the problems are many. I've met so many people who've gotten into bad deals where they didn't understand what they were looking at. I'll give you one quick, example. When you're out there buying a business, one of the measures of cash flow that is often used is called seller's discretionary earnings. Okay. So what this is the total amount of cash flow available to an owner operator that works full time in the business. Some buyers will read that definition. They'll believe if I buy this business, that's how much money will go in my pocket. But the SDE is a derivative of EBITDA. So out of that SDE, the buyer needs to take home a reasonable salary. They need to pay the tax, their own taxes, and the business's income tax, depending on how they split that revenue. Mm-hmm. They have to take care of any capital expenditures because the depreciation and amortization has been added back to get to that number. Mm-hmm. They're going to have to service any debt and pay any interest costs because that's been added back to get that number. And so when you look at all the different things that actually have to be covered, the seller's discretionary earnings is not truly the cash flow of the business. See. But the reason it's become a standard in smaller businesses, Main Street businesses, is because you've got all of these different industries and all these different bookkeeping practices and accounting standards. And we have to find some common ground in order to compare one company to another. Mm-hmm. And so this is the measure that has come about as the dominant one. And I've had people, I've even had people say, I can afford that debt service because I'll just pay him the EBITDA. And I'll say, well, okay, what about your interest, taxes, and your CapEx? Who's going to pay that if you offer the EBITDA to somebody else, right? Yeah. And so people don't understand what they're getting into. And in the worst case scenario is when people actually happen to have money. And I see this a lot with people who might be immigrating from another country who bring a lot of money with them, or people who've profited from some of the swelling real estate markets. So, I live in the Maritimes down here on the East Coast. And one of the jokes is, someone sells their house, who's going to buy a bed and breakfast, with along the seashore with only 7 rooms. Yeah. And the joke is someone who just sold their $1 million home in Mississauga. Yeah. And they're going to come and they're going to write a check. And after 3 or 4 years, they're going to get tired of cleaning toilets and changing sheets. And who are they going to sell it to? Well, they have to wait for someone to sell their home in Brampton. Yeah. Right? Yeah. And then that's how it goes. Right. Yeah. And the reason why it's unfortunate is that buyers that have a lot of money, they often don't get to take advantage of having, for example, oh, excuse me. No. They don't have the advantage of having a banker tell them, I won't approve your loan because your deal doesn't make sense. Right? If they've got the money, then they can go and do something foolish without having some of the roadblocks appear for a lot of other people. Yeah. Once you bring a cash in, all the checks and balances go out of the way, right? Nobody's going to question you at that stuff. You're giving them the money what you need, right? Very interesting. Very interesting. So, you mentioned a few things at the back, and that's one of the things I see in the market as well. You mentioned how to systemize your business, build a process and standard procedures in around the business. I see business owners struggle with that piece a lot on a daily basis, right? Especially, when it comes to technology piece, any other part of the business. I would say the business leaders I met with over the last, 10, 11 years, that's one of the pieces I see, I struggle with. They don't know how to do, get it done. The second of all, they don't have people in a place who could get it done for them, or they don't have partners in that area. Would you say if that piece is taken care, would that increase the value compared to any other item in a business? Does that put the business on a totally different part? If you have everything systemized, what they say if you can take yourself out of business, can the business still operate? Right. If you have the process and everything is in place, business will operate without absence of any person or business owner himself. So every business has systems. It's just a question of where they are. Yeah. So if the business systems reside in a person's mind, exactly, and that person has to be present in order to execute the system every time. And sometimes business owners will fool themselves. They'll say, well, I can teach someone how to do what I do. But most business systems have a lot of exceptions rules, and they'll teach someone the most common path. But then whenever something falls out of that, they have to step in and fill in those exception rules, right?
Mm-hmm.
And so we even see this not just with business owners, but even with employees, where an employee maybe has a certain responsibility, they'll come up with a way of doing it, right?
Yeah.
And then when that person leaves, the system leaves in their head.
Exactly. It goes with them.
Right.
Mm-hmm.
And so then the next person that has to come up has to do that responsibility. They have to then create their own new system. And you can see how what you end up with, I call it heroes and folklore. So if you think about, famous knights or heroes, from legends and myths, right? The only way that you could get something done was by finding the right champion and sending them off, right?
Mm-hmm.
And let them fly by the seat of their pants and hope that they make the right decisions. Well, I've seen businesses built that way. I've worked in businesses built that way. I've worked in businesses when I was earlier in my sales career where they had to hire absolute champion salespeople because they had no idea how to create them.
Mm-hmm.
Right. And so their whole organization was built up with these systems in people's heads.
Mm-hmm.
If you can get that out of your head as a business owner, and you can get it out of the heads of your employees, and you can log it all in a systemized way that everyone can has reference to it, and that somebody can go and look and see how something is done. In the worst case scenario, I actually helped somebody in Washington State buy a business, or maybe it was Oregon. They bought the business. One of the key employees was an operations manager who coordinated the work that they were doing.
Mm-hmm.
And that person had like 15 years experience in that role. And they got into an accident and passed away a week after the purchase was conducted. And so the new owner was in this business. The old owner was there for a transition period, but even the old owner didn't know how to execute that person's role.
Mm-hmm.
And so the two of them had to dive in and recreate all of the process of managing the projects and make sure that everything was done properly with the workflow that was in place, that was undergoing right now in the business.
Yeah.
Because most of what that operations manager was doing was in their head.
Mm-hmm.
And that you can just imagine the risk that you face.
Yeah.
All of the, I have a program for teaching small business systems. And one of the examples that I will use is the trade show. So I know it's COVID and we're not going to trade shows anymore, but if you can imagine a home improvement business, and every spring or winter they go to a home improvement trade show, like a big home show that people come to at a hockey arena or something. And so they attend the trade show and they meet a lot of people and they see some ideas. And after the trade show, they talk and they say, you know what, for next year, we should do this and we should do this and we should do this. Right. Well, and then the trade show ends and then everyone goes back to their regular job. And then the salesman comes from the exhibition company and they sign you up again. And then all of a sudden it's 2 weeks to the trade show and people go, oh, we have to get ready for the trade show again. Let's put our booth together. But people don't remember the discussions that happened at the end of last year's.
Mm-hmm.
And so then you end up going back to the trade show again and you end up doing the same thing again. And you have the same ideas, right? And so what needs to happen is you actually need to create an exhibition trade show system. Mm-hmm. So that there's a documented program that happens every year, mm-hmm. and it has to become someone's responsibility. So maybe it's somebody in marketing or sales, they actually have in their calendar, let's say 3 months before the trade show, mm-hmm. An annual reminder, which says it's time to execute the trade show plan, which means having a planning session where we review the notes we wrote down at the end of last year's show, mm-hmm. to see what changes we have to make in preparation for this year's show. Right. Yeah. And this sounds very logical. It sounds very organized and normal. But the fact of the matter is that most small businesses don't operate with this level of sophistication. Mm-hmm. A bunch of people just every year say, hey, we have to get ready for the trade show. What did we say last year that we should do? And yeah. Ideas are lost, ideas are forgotten. And it's the difference between a company that shows up every year with an incrementally better exhibit booth versus one that just keeps doing the same tired old things year after year and getting the same results.
Yeah. Yeah.
Right. And so if we're going to have continuous improvement, if we're going to have continuous growth, we need to create a mechanism that holds people accountable to make sure that the improvements that we've all worked on are not simply lost. That's the real tragedy, is when systems are in people's heads. You can't, what are those famous books about incremental improvement? There's one at the top. It's probably back there in the bookcase.
Yeah. You mentioned very interesting point though, David. I see that firsthand. We work with a lot of IT departments, and business leaders don't realize how much risk they're carrying, right? I know. I'll meet a business owner, how you running IT. But we have one guy, who's a rock star for us. He knows everything. He knows our business. He knows everything. He takes care of them. And my question is, what happened if the person leaves? Do you have process in place to replace the person? And then you see that, the confusion, there's so much fear kicks in, right? But not realizing that person, your rock star, could be attached to your business risk that you're not taking care. You need a process around it. So if something happened to the person, the person wins the lottery, or something happened, the person's not there tomorrow. All the documentation, any IT system, is crippled without a passwords and all that stuff, right? So I usually go through that discussion of business leaders and try to make them understand, hey, listen, these rock stars you have, these are good people. They're trying to do a good job, but it's your job to put up process and procedures in place, so this person is not increasing more of your business risk. They're supposed to eliminate your business risk, not other way around, right? So it's a very interesting point, but that's what I see a lot of business leaders. It's other part is emotional side, and I don't know how much that impacts on when you sell a business or when you buy a business. I think I would say some smaller business, more business leader, owners like myself. We loved what we did in a technical field before we built the businesses. We were never trained as a business owner. We were very good at our technical trade, whatever we were doing, and we built the businesses. And you worked so hard over the years, and definitely there's an emotional piece to it that is so emotionally attached. When it comes to buying and selling business, definitely the emotions play a role in it. When you're completing a transaction, how big do you see that piece when somebody trying to prepare the business to sell, or they're buying a business? How big is the emotional piece because they work so hard in a business?
Well, I think there's two things, and let's talk about organizing and operating the business first. Okay. A lot of small and medium-sized business owners are not aware of where they reside on an org chart. And I'll ask a lot of my clients, can you show me an org chart of your organization? And what they show me is some kind of pyramid with squares that have people's names in it. Mm-hmm. And that's not the way we build them. So what I teach people is that you build an org chart with roles. So what are the different roles and what responsibilities are attached to those roles? Mm-hmm. And then later we put names in them. And so a lot of business owners will be unaware of the different specific roles that they are filling. And so they will end up doing things in roles for far too long than they should be changing the name in that box to somebody else's name at a given point. Mm-hmm. And so what takes real business maturity, though, extreme maturity, is knowing when your name should likely not be in the top box. So I'll give you a few examples. I actually have worked with clients over the years who, it was a manufacturing concern, and they were building things out of metal, and highly organized process of manufacturing. Every object was custom built, and so very organized. The owner of that business was an operations man, and he knew the construction methods, how to build things, etc. The business grew, it grew. At a certain point on the org chart, he put himself in the operations and manufacturing, head of manufacturing, and he put other people ahead of him, above him. So he hired someone to be the president, he hired someone to be the CFO, and he let them, report to him quarterly at the board of directors meeting. Mm-hmm. And he went to work every day doing what he knew best and where he delivered the maximum value to the organization. A lot of the times you will actually see small businesses that have been held back from their potential because the owner insists on being, the top person in charge, and they don't actually have the proper skill set. So that's one thing. When it comes to selling, that emotional tie-in with the business can be big. And here's where here's how it can manifest itself. I've had people put their business up for sale and have had multiple offers, and they don't pick the highest one, right? Because some of their concerns in selling the business may not actually be entirely just the purchase price. They might also be concerned about what they believe the new owner is going to do with the business.
Mhm.
So people can have concern about employees. People can have concern about communities. I've seen people in smaller communities not sell to a big strategic buyer because they were afraid that that buyer would shut down the plant, move the production elsewhere, right?
Mhm.
And they wanted the business to remain in the community. And so people will have a set of motivating factors in front of them when they go to leave their business, when they go to exit, and it can guide them in a different way than one might expect. And I've also had examples where people's identity has been so intertwined with the business
Mhm.
that they've had a deal to sell and then they wanted to back out of the deal. There's one case. It wasn't one that I worked on, but it was one that I've heard the story, secondhand from the broker who did it, where a deal to sell a business was about to fall apart when the buyer offered the seller that he could keep his office.
Oh.
So the seller sold the business, but he got to keep his office. And so he would come in the morning, he would make coffee, he would chit chat a little bit with people, then he would go home, walk his dog, come back later in the day, meet with some of the customers on the showroom floor, chit chat with them, have some more coffee, and he would go home.
Oh.
But he had been going there for closing in on 5 decades. And so his identity, his persona was so tied into that business that the buyer realized he's not going to do this deal unless I let him make this a part of his life.
Mhm.
And it was great because they had this access to the longevity of the history of the business. And eventually, over many years, the guy did eventually retire. But the danger of that seller was that he literally didn't know what his life was outside of that business. And so a lot of exit planning professionals out there, whether they're talking about family succession or selling a business, a lot of the times part of their work will be, what are you going to do? How are you going to build a life outside of this business? Because for a lot of these owners, business hours are long and they don't have a whole lot going on outside of their business for some of them.
Mm-hmm. Very interesting. Wow. Does that dynamic change, David, as you look at a little bigger businesses? When you go 50 employees up, 100 employees up, does that dynamic a little bit changes? Now you have C-level employees in place. You have a board of directors in place, or you have family members maybe involved, or partners maybe involved. So as you look at a little bigger businesses, does that change dynamic a little bit, or is it the same kind of process?
It starts to change a lot. So I primarily deal with what are called Main Street businesses. So businesses with an EBITDA cash flow of under $500,000. Okay. Once you cross that line, you get into the lower middle market. And the lower middle market, you start to see more sort of professional management, more professional leadership. As you go from lower middle market into mid-market, the language in business changes. People start speaking what I call MBA. So you get more people who are professionally educated in the world of business. The conversations they're having are more technical and more data-driven and less emotional. So if you can imagine a business negotiation where a big company is selling a division to another big company and a bunch of people meet at a boardroom table and they're all MBAs and they're talking about this, and they're coming to an agreement probably without much emotional charge in the room, right? They're both arguing for getting the best deal, but they're going to come to a deal and they're going to shake hands and everything. Where I see a lot of potential friction is when one of these larger companies that speaks MBA wants to go and talk with one of the smaller businesses that is more personality driven, because there can be a mismatch in the dialogue. I saw an interesting thing the other day where a business seller became offended when one of the people on the acquisition team referred to their business as the target business.
Wow.
Right. And so if you're talking about mergers and acquisitions, often the business being bought is called the target. Right.
Yeah.
But this person owned the business, and the terminology made him feel like they literally had painted a target on him. They were going to get him.
Yeah.
Right.
Yeah.
And so that's part of what I'm talking about, is that, someone will have an emotional investment in that business, and the other people don't quite understand that. They're not coming from the same angle. And I've actually been hired in some of these situations to help consult with the acquirers on how to best, create a plan or manage that conversation.
Very interesting. Yeah, you can see the two different dynamics. We speak, even though we speak in the same language, but we speak in a different language. One is more transactional, more logical. Another one is completely emotional because somebody put, their life sweat into building their company, and definitely they're going to be more sensitive to when they're trying to sell a business.
Oh yeah, absolutely, yeah.
Wow. Interesting. So what is a business can do? David, from your side, if somebody wants to, either grow with the acquisition or with the merger. Somebody wants to, 2022. Everybody's, we almost there, and everybody definitely planning this time of the year. They looking, how do I scale up the business again? Either with the acquisitions or just a revenue growth, or build a business value. What are some of the things you can recommend they should look into that they can get to the plans where they want to get to?
Sure. So, growth through acquisition. If someone wants to grow their business by buying another business, very rarely happens by luck. There are plenty of stories out there about a business an owner wants to sell his business, and he sends off letters to potential acquirers to get their attention. That doesn't happen a lot. There is a whole ecosystem of people out there trying to meet that business owner before they meet with a potential acquirer. So business brokers are sending them things all the time, talking about how if they list the business with the brokerage, that the brokerage will create competition amongst buyers and get a higher price. There are people out there looking to grow actively who are looking for acquisition targets, and they're sending off those letters, they're making those phone calls. And so there's a lot of activity going on all the time for people trying to make these matches happen. And so if it's your plan to grow through acquisition, then you actually need to make a plan, and you need to enact that plan. And it can look very different from different kinds of businesses. So in larger companies, here's an interesting case. You might actually have a VP of M&A whose full-time job it is to be like a business broker looking for acquisition targets. And they're not looking at business for sale websites. They're out there knocking on doors. They're analyzing where they want to grow, where they have strategic advantages to grow, maybe parts or regions where they have customers that have locations, but they aren't there to serve them, for example. They're looking at this. There are even some companies that have active acquisition programs. And one of the best examples would be in the pest control industry. So if someone's licensed for pest control and they get a pickup truck and they get some customers, they will start getting letters in the mail from the big pest control companies saying, hey, when it's time for you to retire, give us a call. We have a retirement program for independent operators. And they are actively trying to get these independent shops into their pipeline. And that's how they grow. And so thinking about how you're going to grow, who ideally you want to acquire, that's the hardest part. Because once you can sketch out that company that you would like to add, I mean, literally, then you just have to look at the yellow pages or some kind of industry list or association membership list, and you can find them. And then it's a question of opening up those conversations and being prepared to invest the time in building a relationship so that, remember, those motivations that make people want to sell, oftentimes when you contact someone, they won't want to sell. And you need to build and nurture a relationship so that when something happens in that person's life that changes their mind, lucky for them, they already know someone that wants to buy a business like theirs. And that's when you get your opportunity.
Wow. Is that different than the process in the US, David, or is it the same kind of process that they go through as well? Because majority of business leaders, I don't know if you follow the same report, but I saw a report from our RBC that majority of business leaders in Canada, small businesses, they are above age 55 or 60, so they are looking for some sort of exit at very in a short period of time. So is it the same process there, or is it a little bit different here in Canada?
No. It's the same everywhere. And about the comments about the age of most business owners, there's this term, the Grey Tsunami, that predicts that all these businesses are going to want to be sold. And, a lot of people who are over 55 might say that they want to exit, but I run into so many of them, Gurmeet, who are not prepared. And they really believe that they are the person that controls everything to do with the timeline. Like a lot of them will think that the day I turn 65, I can put the business up for sale and it'll be sold 3 months later and I'm gone. And if that's the strategy, then, you may not achieve success. I mentioned earlier that I was on a conference call with one of these large business selling websites. They do a survey of the people that use the website and people who are members but have not yet listed a business for sale. One of the biggest reasons why people who own businesses have not listed their business for sale, according to their survey, was that the business was performing too well to sell. Think about that. So this is a person who's initiated an idea that they want to sell. They've joined the website. They're learning about selling their business, but they don't want to sell because it's performing too well right now, right? And so here's the issue, is that when your business is performing well is exactly the time you should be selling it.
Yeah.
Right.
So where is that coming from, that they never planned the exit strategy, or is it just a lack of exit strategy, or they just never planned it accordingly? Just, I need to prepare for this stuff.
It's just a 3-month focal point.
They're not looking beyond that.
They're just looking right in front of them.
Yeah.
And, too many people see selling a business as some kind of ripcord to a parachute. I'll work at this, and if it doesn't work out, I'll sell it. Well, no, the best exits for the biggest dollar value happen when you've got growth and profitability and great prospects for the future. All of those things are going to drive the value up. When there are bumps or uncertainties or unknowns, that's when the value goes down or the terms tip into the favor of the buyer, where, you might get your price, but you're not going to get all your money on closing, or you're going to have to finance over a longer period of time, or you might end up behind a bank and they're going to require you to do a 5-year postponement before you get any of your money.
Yeah. Interesting. I see, I don't know if you notice the same thing. I see business leaders, who build the companies, 100 employees, 200 employees, that area. But, they set back now, they're not actively involved in a business anymore. They got the C-level employees who are making decision around the business. They're making a decision on an operational level is one thing, but they're making a business decision on an ongoing basis. And, you see that, these decisions been made, their stake in a business is completely different than somebody who built a business, right? So totally different risk, totally different stake. But business leaders, they step back and they simply, let them make all the decision.
But hang on here. Let's talk about that, because that is an exit strategy. Because when we talk about exit strategies for business owners, we're talking about them leaving the business. And one of the most lucrative exit strategies ever, if you can pull it off, is to be able to not spend your time in the business. Remember, they sell for privately controlled businesses sell for relatively low multiples of earnings.
I see. Okay.
So most of the time when I explain to someone what their business will sell for, the most common reaction is, well, if I just kept it for a few years, I'd have the same money and still own the business. And they're right? So the most lucrative way to exit a business is to fill all the roles with other people and continue to enjoy the cash flow and ownership benefit while you are free to do something else.
I see. So that is part of the exit strategy, what you're saying, that they are already silent, but they're still making the same revenue that they should be making.
Yeah, they're earning the profits of the business, right? And they don't have to go there every day. So they have left the building. What is it? Elvis has left the building, right? And they probably are still getting calls and stuff, but in my mind, if you can be active for a couple hours a week and still enjoy the cash flow from the business, then you've really won, haven't you?
So let me ask you this. This is probably more for me than anybody else's question. So if you're selling a business, if you have a business that you lowering business, people's business risk, or you're trying to lower somebody's either risk, or they're trying to help them increase revenue, or trying to make people more productive. Those are your some of the services you deliver. Business owners and presence, you get a C-level employees. That creates a challenge for them to a decision-making process because, nobody going to make a decision on that. Hey, listen, I really need to grow this business, or I really need to be careful if I can make it more productive, or really need to lower the business risk, because all those things not so critical for C-level employees.
Well, I mean, that's how active is the board going to be, right? Mm-hmm. I mean, and we're talking about that organizational chart again. So if the owner only exists at the board level, then what are the board meetings looking like? What kind of governance are they creating? What mandates and expectations are they putting on those C-level employees, right? Over at the board meeting for Coca-Cola, the board is giving instructions to the president and the CEO, like, this is what we want to see. We want to see this kind of growth. We want to see, expansion in this way, or cutting this cost, or whatever. It's up to management to execute on that. And usually they have a compensation package tied to the performance, right? So it's growth as an owner. So, you take that person, that Michael Gerber E-Myth book, the technician versus the entrepreneur. You take the technician who knows how to do a certain trade and you make them the business owner, and then the business starts to grow. I gave you one example of a person who let other people get in above them because they knew their limitations, right? Well, if that person is going to grow as a business owner, then they have to grow in their skill set. They have to learn how to move from the technical skill up to running a business. Eventually, if they're going to keep going and the business keeps growing and they're going to exit the day-to-day, then they have to grow into that skill of learning governance and direction of how to be a board member at a board member of one, probably, and give direction and guidance to the people that are actually running the day-to-day. And that's a skill set. It's something different. I draw the analogy to a chain of gas stations, right? So if you own a gas station and you run it and you're there every day, like, you're the manager and you're the owner, right? And so if you decided to move to Florida but still own it, you would hire a manager. Now, is that manager going to run the business for a full year and then send the financial statements to you? No, right? Because if you compare it to the chain of gas stations, right? Petro-Canada or Esso or whatever, those stores have managers too, but they don't get to make all the decisions for a year and then send a set of financial statements to head office. They have someone called a regional manager. And so many locations report to that regional manager. So if you as a business owner want to remove yourself from running the individual store, you have to develop the skills of the regional manager. What are we looking at? So key performance indicators. Am I going to log into the sales system back end through the cloud every week and see what the results are? Am I going to spend some time checking the video cameras or what have you, right? What skills would that regional manager have? And so if you want to use that analogy, it expands to any kind of business. What would be, if 100-person business were sold to a big multinational corporation, who would the leader of the 100-person business report to? And what skill set would that person have? These are the skills that the owner would have to develop if they want to exit and continue to be the owner.
So, from a time somebody started a business, by the time they look for, it looks like the skill set's changing all the time, right? You need to have an operational skill set, then you have a leadership, then you have to have a, looks like, you got to be willing to sharpen your skill set, any different, state of your business or life, right?
Yeah, absolutely. And it's interesting. On my YouTube channel, there's an interview with a guy named Ian, who started off as an auto mechanic and eventually opened his own shop where he worked as a mechanic. And he actually describes how he went through this development and eventually he built up to more than one location. And he owned the real estate. And he's moved on to becoming an investor. He actually sold his auto repair business and retained the building. And he sold the repair business on a note so that he could maximize his total return through holding the note with interest. And he's the landlord. So he's gone to becoming a real estate investor. And now he's got his hands in all kinds of other different investments. And he describes how he, started to invest in learning through taking education programs about how to run a more successful auto repair business. And as his awareness and as his mindset changed over the course of time, it allowed him to keep progressing from one stage to the next. And, now a very, very successful gentleman, started off as an auto mechanic, and certainly now benefits from skills that were not taught, at the college where he learned how to fix cars.
Mm-hmm. You've got to be able to acquire this skill set either from a books or somebody built a YouTube channel with tons of videos, or a lot of education there, like in your channel. A lot of education is there, and people written. I think most of business leaders, they do write a lot of content online and the books out there, right? So for people to take a learning approach.
Yeah, and I think one of the most important things is attitude, is just understanding that you don't know everything,
Mm-hmm.
and being open to learning, so that those new ideas can get through your perceptive filter and get into your head,
Mm-hmm.
and time to stew on them. Most of the successful leaders I know have elements in their day or their week where they just have time to be thinking about stuff.
Mm-hmm.
And one of the biggest things that I challenge every person on, every business owner or everyone who is trying to buy a business, is I'll ask them about who they spend time with. A lot of people will have their friends from school years, and not everyone proceeds along the same path.
Yeah.
And you cannot be growing into a leader of a business and wanting to achieve new heights and expand and buy other businesses if you're spending most of your time hanging out with your buddies from high school that have none of those things in common with you.
Yeah.
Right.
Mm-hmm.
And so you need to figure out, who am I spending my time with? Am I in the right places where I'm being exposed to the right attitudes? Right.
Mm-hmm.
And it's interesting. What I find is that, I could be at one place meeting a bunch of good friends that are in all different kinds of areas of life, and someone will express an attitude about something in a business or the news. I'll be like, oh, those guys over there, they're going to go on strike because they're looking for more money. It's only fair that they get more, blah, 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 blah. And then I'll be in a different place, a club where business owners tend to be, and they'll be discussing the same thing. And they'll say, oh, wow, I wonder how they're going to survive a 6% increase in their biggest expense.
Totally different perspective.
Right. And so they're talking about it from a different point of view. A business is positive, profit is positive kind of view. And listen, if anyone out there listening to this ever hears about somebody downplaying profit or downplaying, the value that business brings to the community, or trying to say that someone has greater virtue because they're in a not-for-profit type of setting, all the things we enjoy as a society, the roads, the hospitals, the schools, are all paid with by taxes. Yeah. You have to have a profit to pay taxes.
Of course.
And so whenever somebody tries to virtue signal to me about something being better because it's somehow not for profit, I'll say, oh, you mean like they don't contribute to anything? Like they're a bunch of, parasites on society instead of people that help pay the bills?
Yeah.
Like put people in their place, because the business people of the world foot the bill for everything.
Of course. I mean,
everything.
The problem is we are minority when you look at that population in a country. We are minority compared to that other population, and that's where a lot of political interest, a lot of political bandwidth goes against business leaders, right? Because population wise, we're probably a very small community, right? Business leaders, right? So I think that's one of the things. But definitely, I totally agree with you. Without that, economy is not built by political leaders or governments. The economy is built by businesses, right? Somebody got to move somebody got to sell somebody got to build profit. That's how economies are built, not by somebody sitting in office and trying to sign a bunch of policies and procedures.
That's absolutely true. Absolutely true.
Beautiful. So tell me a little bit. Talk about a little bit. How did you start a YouTube channel, David? What inspired you to start the channel?
Well, I wrote my first book in 2014, and I thought I would start a YouTube channel to promote it. And people started talking to me in the comments and asking questions, and more and more of it specifically about buying and selling businesses, because that was my professional background. Mm-hmm. And then the channel sort of changed into that. And then I wrote more books, which were all centered on buying and selling businesses. And so that's how it went. And I mean, if people are interested, every week there's a new video, and I put them up also over on my blog site, which is davidcbarnett.com. And there's links there to playlists on YouTube. So I'd love for people to subscribe to me on YouTube or come get on my email list on the blog. And that's also the audio from the YouTube videos is on every podcast catcher out there. Just look for David C. Barnett, small business and deal making, and you'll find it.
Beautiful. So what did you see, before we talk about that, going, so what do you see the growth in, what did the YouTube channel do for you? You've been doing it for 7 years, right? The last video I looked at, it was 7 years ago, right?
Yeah.
So what do you see that what is done for you over the years? You've been investing a lot of time and energy into it.
What has it done for me? It's changed the selling cycle. So if you look at the sales cycle, there's always a part there called building rapport, where you get to know the customer, right?
Gotcha.
So my YouTube channel has automated that part. So I now get emails from people, like way back when I first started consulting, especially full time, I was doing more business locally. I would get referred to people and they would say, let's get together and have coffee. I'd like to get to know you and see how you can help me. And I spent a lot of time on those meetings, basically interviewing for the opportunity to get consulting work, right? And what now happens is I get emails from people who say, hi, David, I've spent 3 hours every night for the last 5 nights watching your videos, and I want to work with you. This is my project. What does it cost?
Nice.
It's totally different. And so the people are able to get to know me through the YouTube channel by watching the videos, and they get a flavor for the depth of experience that I have and the things that I stand for. And they can make a decision usually like, yeah, that's the kind of guy I want to work with or not. And I mean, I don't know. I don't hear from the people who don't want to work with me.
Wow. Kudos to you that it is hard work. I've been doing it for only 6-7 months. You've been doing it for 6-7 years. To do that consistently, over the number of years, definitely is a lot of hard work. And I'm sure that, sometimes you just want to take a break, but, once you're committed to it, you want to keep going with that. It is a lot of hard work. But I think, I'm feeling that as 7 months I've been in. So, it's rewarding, definitely you learn a lot, you grow a lot as a person, and I get to meet people like you, and we chat, but definitely, it's a hard work, you have to take a lot of time out of your weekly basis and give it to this channel and grow this channel over the time, right?
Absolutely. Yeah. It's a lot of work, but it pays off. And, I kind of think of it as part of my legacy. I get emails all the time from people who say, wow, I avoided doing something really stupid because of what I learned in one of your videos. Beautiful. Or, wow. And to me, that really validates all the effort that I put into it. The channel is there to serve me as a marketing tool for my business, but, nothing is more upsetting to me than someone who gets into a bad deal or loses a bunch of money that they worked sometimes for decades saving because they didn't know something or didn't understand something that they could have found out if only it was out there to find. And that's driven me for a lot of these years too, is some of these stories of people's losses. And then it feels good that other people are writing to me saying that they've had things work out because of the warnings that they've gotten through videos that I've made.
Yeah. You're making impact on a lot of people. You're serving a lot of people. You're helping a lot of people. I think that's a great gift that you could give to your community and beyond. Anybody outside. I will definitely recommend business owners who are watching our podcast today. Either you're looking to buy or sell a business, or you're simply looking to grow and build a business value. Check out your YouTube channel. Check out your podcast. Take a listen and connect with you. Maybe sometime conversation can open up a lot of blind spot as a business owners we have that we're not looking at through the blind spot, but somebody like you been doing it for a long time can help people to see through those blind spot. So where can people find you, David? Is your website I'm going to put all those links below the video as well. So what is it?
DavidCBarnett.com is like the main place. And then from there, you can find me in the other different places on the internet that I'm at. And you can also sign up for my email list. And I send out an email almost every day, but you can select what topics are of interest to you. So business owners might select simply, selling a business. and you'll only get the emails that I send out related to that topic.
Beautiful. Well, I want to appreciate your time. We've been very generous with the time. Thank you so much. I learned so much from our discussion. In every discussion I have, I take away a lot of pointers, but I learned so much from our discussion. Definitely, I'm going to order for your books, and I'm going to go through that as well. So thank you so much.
Thank you so much, Gurmeet. It was great to spend time with you today, and have a prosperous 2022.
Thank you. Have a great holidays, and we'll talk other side.
All right. Bye-bye.
Thanks, David. Bye-bye. Hi there. Thank you so much for investing time with us and watching this video. Hope you enjoyed this discussion. For next episode, please don't forget to subscribe to this channel and send your feedback. Until next time, have yourself a great day. We'll talk soon. Bye-bye.